In this video, we are going to create an expert advisor that utilizes the stochastic indicator to make trading decisions based on market conditions. Let's see how we can do that. We start Metaeditor by clicking a little icon or pressing F4. This opens the environment where we can write and edit our MQL code. The first thing we do in our code is include the CTrade class from the standard library. This class provides simplified trading methods, such as PositionOpen and PositionModify, which we will use to manage our trades. Next, we instantiate a CTrade object with default parameters. This object will manage all trading operations, including position management. We then define our strategy configuration parameters. These parameters can be adjusted in the Expert Advisor properties. The LookbackBars parameter specifies the historical range for highs and lows, allowing us to analyze between 1 and 1,000 candles. The MinCandlesBack parameter sets the minimum age for valid highs and lows, which can range from 5 to 50 candles. The TrailingOffset parameter defines the safety distance for the trailing stop-in points, with a range from 1 to 20. The KPeriod, DPeriod, and slowing parameters are used for the stochastic indicator, defining the periods for the %K line, %D line, and the slowing factor, respectively. The UpperLevel and LowerLevel parameters set the thresholds for overbought and oversold conditions. We then declare global variables and handles to store state between ticks and indicator data. The stock handle variable will hold the stochastic indicator handle, while the K buffer and D buffer arrays will store the stochastic values. The price data array will hold the OHLC price data, and the prev bullish cross and prev bearish cross variables will track the previous crossover states. The expert initialization function is executed once when the expert advisor starts. In this function, we create the stochastic indicator handle using the iStochastic function. This function takes parameters such as the symbol, time frame, KPeriod, DPeriod, slowing, and the mode of calculation. We also configure the arrays as time series, ensuring that the newest data is at index 0. This alignment allows us to work with the data in a natural time flow. After setting up the indicator, we return a success code to indicate that the initialization was successful. Next, we define functions for opening positions. The openByPosition function is responsible for executing a buy order. It retrieves the current asked price using the symbolinfo double function and then calls the PositionOpen method from the CTrade class. This method takes parameters such as the symbol, order type, volume, price, stop loss, take profit, and a comment. In this case, we specify a position size of 0. 10, which means we are buying 10 micro lots. The initial stop loss and take profit are disabled by setting them to 0. Similarly, the openSellPosition function executes a sell order. It retrieves the current bid price and calls the PositionOpen method with the appropriate parameters for a sell order. The main function for price updates is executed on each tick and contains the core logic of our strategy. In this function, we retrieve historical price data for analysis by copying H1 candle data for the LookbackPeriod using the copyRates function. This function takes parameters such as the symbol, time frame, start position, count, and the target array where the data will be stored. We also load the stochastic values from the indicator buffers using the copyBuffer function. This function copies calculated stochastic values into the K buffer and D buffer arrays for analysis. Next, we check the status of open positions. We determine if any open positions exist and their type by iterating through all open positions. We use the positionsTotal function to get the total number of open positions and the positionGetTicket function to get the unique ticket number for each position. If a position belongs to the current symbol, we mark that an open position was found and store its type. We then check for stochastic crossover signals. A bullish crossover occurs when the %K line crosses above the %D line while being in the oversold region, indicated by the lower level parameter. Conversely, a bearish crossover occurs when the %K line crosses below the %D line while being in the overbought region, indicated by the upper level parameter. If a bullish crossover is detected and there is no previous bullish crossover, we check if there are any open positions. If there are no open positions, we open a new buy position using the openByPosition function. If there is an open by position, we identify the lowest low in the lookback period using the iLowest function. We then check if the identified low is at least MinCandlesBack old and if the current price is above this low. If these conditions are met, we calculate the trailing stop level by adding the trailing offset to the last low price and call the process trailing stop function to manage the trailing stop. If a bearish crossover is detected and there is no previous bearish crossover, we follow a similar process for sell positions. If there are no open positions, we open a new sell position using the open sell position function. If there is an open sell position, we identify the highest high in the lookback period using the iHighest function. We check if the identified high is at least MinCandlesBack old and if the current price is below this high. If these conditions are met, we calculate the trailing stop level by subtracting the trailing offset from the last high price and call the process trailing stop function. At the end of the onTick function, we update the previous crossover states for the next tick. The process trailing stop function is responsible for managing the trailing stop for both buy and sell positions. It loops through all open positions and selects each position by its ticket number. We check if the position matches the specified type and belongs to the current chart symbol. We then retrieve the current stop loss value and update it based on the position type. For buy positions, we modify the stop loss if the new level is higher than the current stop or if there is no existing stop loss. For sell positions, we modify the stop loss if the new level is lower than the current stop or if there is no existing stop loss. Finally, we press F7 to compile the code. If this was too fast for you or if you don't understand what all the code is doing, you may want to check out the premium course on our website or watch one of the basic videos first. If that works, we go back to Metaeditor by pressing F4 or clicking on the icon. Back in Metaeditor, we press Ctrl and R to start the strategy tester. We pick the expert advisor that we have just created, enable the visual mode, and start a strategy test. We should see the expert advisor on the chart. If you are already a premium course member and have an idea for a video like this one, you can send us an email. What we have learned is how to code an expert advisor that utilizes the stochastic indicator to make trading decisions based on market conditions. We have coded this expert advisor with a few lines of MQL code. Thanks for watching, and I will see you in the next video.